Welcome back, everyone. In today's video, we'll be discussing 8 stocks at critical levels. Out of these, 2 are at breakout retest levels, 2 seem to have completed their breakout retests successfully, 2 are nearing a potential downtrend breakout, and the last 2 are holding strong at support levels in their uptrend. There's a lot to break down and analyze today, so stick around. You'll discover some exciting opportunities with these stocks at crucial levels. All right, let's start with the first company on our list today. The ticker symbol for this company is HIG. The chart you're currently seeing on the screen is opened on a monthly time frame, covering a long period from 2002 to the present date. This chart provides a comprehensive view of the stock's history. Looking at this chart, you can see that the stock made a high of $106.50 back in May 2007. Since then, for nearly 17 to 18 years, it traded below that level. However, in July 2024, something significant happened. The stock gave a breakout and subsequently moved higher, making a new high of $123.74. After reaching this new high, the stock has now pulled back for a short retest. If you look closely, the stock is showing buying interest near the breakout level, which is a positive sign. Let me switch to the weekly time frame to give you a clearer view. On the weekly chart, you can see how the stock has come back to the breakout level after its move in July 2024. Now it is showing signs of buying from lower levels, which indicates renewed interest around this price point. Let me zoom in to highlight this further. The current market price is about 8% above the breakout level, which further confirms the buying activity. Additionally, the stock is trading well above its 250-day exponential moving averages, EMA, which is another bullish signal. What makes this setup particularly compelling is the sheer amount of time it took to break out of this resistance level, nearly 17 to 18 years. Such a prolonged consolidation often sets the stage for a strong breakout. Now let's talk about the historical dip. The stock lost nearly 97% of its value during the 2008 to 2009 financial crisis, which was largely driven by the housing market collapse. Despite this, the stock has recovered and is now testing new highs. If this breakout retest proves successful, some traders predict the stock could see a significant upside, possibly doubling from these levels. This assumption is based on the idea that the stock could retrace its historical decline. However, keep in mind that such targets are speculative and not guaranteed. To summarize, HIG looks like a promising candidate for a long trade. Given its successful breakout after years of consolidation, the buying interest at retest levels, and its position above the key 250-day EMAs. Keep this one on your watch list, monitor its momentum, and see if it can reach a new all-time high. All right, now let's move to the second company on the list today that is retesting its breakout. The previous stock we discussed was undergoing a horizontal breakout retest, but this one is a downtrend breakout retest. Let's analyze this chart on the daily time frame. The company's ticker is AMAT. That's AMAT with dashes in between. It made a high of $255.57 on the 11th of July, 2024. Since then, it has been locked in a prolonged downtrend that lasted for over 6 months, as you can see on the screen right now. What changed was on the 15th of January, the stock gave a downtrend breakout. By the way, I had covered this stock before the breakout happened. Since the breakout, the stock has rallied approximately 10 to 11% before pulling back. Now let's continue with the chart we're discussing. You can see that the breakout occurred on the 15th of January, and after that, the stock has retraced back to the trend line. Let me zoom in so you can see this more clearly. If you look closely, there has been strong buying interest near the bottom of the trend line. Although the stock dipped below the trend line momentarily, there was solid buying from the lower levels. This is visible as a long wick forming on the candlestick. An interesting observation here is that the candle closed above the trend line, which previously acted as resistance during the downtrend. This is a positive sign. Currently, the market price is exactly on the trend line. And if this retest is to be successful, it needs to move up from this point. However, if the stock closes below the trend line by the end of the market session, then the setup will be invalidated and we'll have to look for other opportunities. But as long as the candle closes above the trend line, the setup remains intact. This is why I emphasize that the stock needs to bounce back from this point, as there is very little room for downside without breaking the entire setup. If the retest is successful, the stock faces a crucial psychological resistance at the $200 mark, which could act as a barrier. However, the good news is that the $200 level is still approximately 14% above the current market price. So even if the stock tests this resistance level, there is an upside potential of about 15% from here. In summary, keep AMAT on your watch list and monitor its momentum closely. Let's see if it can bounce back from this point and approach the $200 resistance level. All right, now let's move to the two stocks where the breakout retest seems to have been successfully completed. The third stock on the list today is TYL. I've opened the chart of this company on a weekly time frame, so you can see that it made a high of $557 back in November 2021. Since then, the stock has traded below that price in a consolidation phase. However, it broke out of that level in July 2024, so the breakout happened approximately 6 months ago. After breaking out, the stock made a new all-time high of $637 before retracing. Now, for the past 3 weeks, we've seen consistent buying from the breakout level. This is reflected in the chart as 3 consecutive green candles, which indicate strong buying interest. What's next for this stock? If it breaks its all-time high of $636, then it can move into uncharted territory and potentially create a new all-time high. However, let me emphasize that nothing in the stock market is guaranteed. The market is inherently uncertain, and no matter how promising a chart setup may appear, you should never rely solely on the chart. Always have a defined stop loss and a trading strategy in place. My objective here is to show you stocks that are at crucial levels so you can conduct your own research and analysis. So keep this stock, TYL, on your watch list. It appears to be a strong candidate for a long position. If we talk about potential targets, the dip the stock experienced previously was about 50% down. Many traders believe that if a stock has dropped a certain percentage, after a breakout, it could potentially move up by a similar percentage. This is not my advice, but it is a strategy some traders use, so you may want to keep it in mind. Now let us move to the next stock, which is very similar to the one we just discussed. It also appears to be a successful breakout retest. The chart you're seeing now is for the company SEIC. This stock made a high of approximately $78 back in 2018, which means it has spent almost 7 years consolidating below that price. Finally, we saw a breakout followed by a pullback, and now there is buying interest from the lower levels. The setup is very similar to what we've already discussed, so I won't go into too much detail. However, let me highlight this for you on the monthly time frame. Let me zoom in so you can see this clearly. On the monthly time frame, we still have about 4 more trading sessions, including today before January closes. If you look closely, the wick that has formed on the candlestick from the breakout level is impressive, showing significant buying interest after 7 years of consolidation. This gives us a clear indication that the retest in this stock has been successful. So keep both these stocks in your watch list and monitor their momentum closely. They both appear to present promising setups. All right, let's move to the next 2 stocks, which are very close to giving a breakout from their prolonged downtrends. The 5th company on our list today is HVT. Looking at its chart, this stock made a high of $30 back in February of 2024. Since then, it has been in a consistent downtrend, facing multiple rejections from the trend line that you can see on the screen. Now, the stock's current market price is extremely close to this trend line, which makes it an important level to watch. If the price manages to move above the trend line, we could see a breakout, And if that happens, it would mark the end of an 11-month consolidation phase, a notable time frame for a downtrend breakout. The stock is currently trading above the 50-day exponential moving average, which is a positive sign. However, the 200-day exponential moving average, located above the current market price, may act as a potential resistance. Interestingly, the distance from the breakout level to the 200-day EMA is roughly 9 to 10%, meaning that even if the stock faces rejection at the 200-day EMA, there's still a possibility of a decent rally in that range. That being said, it's important to note that the stock has faced similar rejections at the trend line in the past, so a breakout is not guaranteed. To confirm a valid breakout, it's crucial for the stock to close above the trend line on a daily closing basis. In addition, from a broader chart perspective, there's resistance forming around the $25 level, which traders should also keep in mind. Meanwhile, the pre-market session has shown some encouraging signs, with the price slightly moving above the trend line. However, this move doesn't seem very convincing just yet, so it's something we'll need to watch closely. Now, moving on to the sixth stock for today, which is HPP. This stock has a very similar setup to HVT, so I'll keep the discussion concise. HPP made a high of $9.89 in January last year, and since then, it has been in a steady downtrend, repeatedly facing rejections from its trend line. Currently, the stock's price is sitting very close to this trend line, putting it at a make or break level. If it manages to break above the trend line, the next resistance to watch will be around $3.90. One thing to be cautious about here is that the stock has struggled with the 50-day exponential moving average, which has acted as a strong resistance in the past and could do so again. Whether the stock manages to break this resistance or faces rejection will determine its near-term direction. To summarize, both HVT and HPPP are nearing crucial levels and have the potential for significant moves if breakouts occur. Keep these stocks on your radar and track their momentum closely. As always, wait for confirmation and ensure proper risk management before taking any trades. Before we discuss the final two stocks, I'd like to thank everyone for watching this video. If you've found these stock picks helpful, please take a moment to like this video and leave a comment. This small effort helps the YouTube algorithm reach more viewers, which motivates me to bring you consistent, high-quality content. Now let's dive into the seventh and eighth stocks, both of which are positioned at support levels while maintaining an uptrend. The seventh stock is BMA, and I've opened the daily timeframe chart for reference. Starting from August 5th, 2024, this stock has been on a steady uptrend. The trend line has acted as support multiple times, and now, for the sixth time, the stock has once again approached the same trend line. Notably, on Monday, the stock fell sharply by 6.5%, but it stopped exactly at the trend line, demonstrating its strength. Encouragingly, the pre-market price indicates a rebound, showing a 3% increase at $100. This suggests that institutional or retail interest exists, as orders were likely placed at this critical level. From a risk-to-reward perspective, entering at the current price offers a clear advantage. Setting a stop-loss just below the trend line limits the downside risk to about 1%. On the other hand, the potential upside, if the stock retests its previous high, is roughly 20%. This creates an excellent risk-to-reward ratio of 120, which aligns perfectly with the strategy we emphasize on this channel, minimizing downside while maximizing upside. Additionally, the stock has consistently taken support from the 50-day exponential moving average, EMA, further reinforcing its strength. Currently, the price is positioned just above the 50-day EMA, providing dual confirmation of support. The eighth stock is Shopify's, and it shares a very similar chart pattern to BMA. Shopify began its uptrend around the same time on August 5th, 2024, and its trend line has similarly acted as support. On Monday, just like BMA, Shopify rebounded precisely from its trend line after a temporary dip. Historically, the 50-day EMA has also served as a reliable support level, and the stock is once again hovering near it. This dual support from both the trendline and the EMA strengthens the bullish case. For Shopify, the previous high is approximately 12% higher than the current price, providing a solid risk to reward ratio of 1 to 12. However, if you feel the current price is outside your risk tolerance, you may wait for the stock to approach the trend line again. That said, there's no guarantee it will retrace to those levels, so be mindful of your trading strategy. One noteworthy observation is that Shopify has recently formed a minor downtrend from its latest high. If it breaks above this downtrend, the stock could gain further momentum, signaling a stronger move upward. In summary, both BMA and Shopify exhibit strong support at their respective trend lines and EMAs, with limited downside risk and significant upside potential. Keep these stocks on your radar, and if they align with your strategy, consider them for your trades. Uh, that concludes the 8 stocks for today. If you found this analysis helpful, please subscribe to the channel as I share similar videos at least twice a week. Also, a quick announcement: when we reach 400 subscribers, I'll share something exciting that I think you'll enjoy. Stay tuned, and thank you for your continued support.